Welcome to our deep dive into whole life insurance. Today, we'll explore what whole life insurance is, how it works, and why its cash value feature makes it unique. Whole life insurance is a type of permanent life insurance that provides coverage for your entire life, as long as premiums are paid. Unlike term insurance, which expires after a set period, whole life stays with you for life. Let's start by understanding the basics and then move on to the cash value component, which is often misunderstood but can be a powerful financial tool. Whole life insurance is designed to last your entire lifetime. This means that as long as you keep paying your premiums, your beneficiaries are guaranteed to receive a death benefit, no matter when you pass away. This permanence is what sets whole life apart from term insurance, which only covers you for a specific period. The lifelong coverage provides peace of mind, knowing your loved ones will be financially protected regardless of when the unexpected happens. One of the key features of whole life insurance is fixed premiums. Unlike some other types of insurance where premiums can increase over time, whole life premiums remain the same for the duration of the policy. This predictability makes budgeting easier and ensures you won't be surprised by sudden increases. Fixed premiums are a major reason people choose whole life insurance for long-term financial planning. The death benefit is the amount paid to your beneficiaries when you pass away. With whole life insurance, this benefit is guaranteed as long as premiums are paid. The death benefit can help cover funeral expenses, debts, or provide financial support to your loved ones. It's the core purpose of any life insurance policy, and whole life ensures it's always available, regardless of age or health changes. Cash value is a unique feature of whole life insurance. As you pay your premiums, a portion goes into a savings-like account within the policy. This cash value grows over time, tax-deferred, and can be accessed while you're alive. It's like having a built-in savings component that you can use for emergencies, loans, or even retirement. Let's explore how this works in more detail. The cash value in a whole life policy grows slowly at first, but over time, it accumulates and can become substantial. Growth is typically guaranteed and may also earn dividends depending on the insurer. The cash value grows tax-deferred, meaning you don't pay taxes on the growth until you withdraw funds. This makes it a powerful tool for building wealth within your life insurance policy. You can access the cash value in your whole life policy through withdrawals or loans. Loans are tax-free as long as the policy remains in force and you pay interest on the borrowed amount. Withdrawals may reduce the death benefit, so it's important to understand the impact before taking money out. This flexibility allows you to use your policy for emergencies, opportunities, or planned expenses. Policy loans are a popular way to access cash value. You borrow against your policy's cash value, and the insurer charges interest. The loan does not require credit checks or approval, making it easy to access funds. However, unpaid loans and interest can reduce your death benefit, so it's important to manage loans responsibly. Policy loans offer flexibility but require careful planning. Withdrawals and loans are two ways to access your cash value, but they work differently. Withdrawals permanently reduce your policy's cash value and death benefit. Loans, on the other hand, allow you to borrow and repay, restoring the value if paid back. Understanding the difference helps you make informed decisions about using your policy's cash value. Whole life insurance offers several tax advantages. The cash value grows tax-deferred, meaning you don't pay taxes on the growth until you withdraw funds. Policy loans are tax-free as long as the policy stays active. The death benefit is generally paid out tax-free to beneficiaries. These tax benefits make whole life insurance attractive for long-term financial planning. Whole life insurance guarantees both the death benefit and the cash value growth. These guarantees are backed by the insurer, providing stability and predictability. Unlike investments that fluctuate, whole life offers certainty, making it a reliable part of your financial plan. Guarantees are a major reason people choose whole life over other types of insurance. Some whole life policies pay dividends, which are a share of the insurer's profits. Dividends can be used to increase your cash value, reduce premiums, or purchase additional coverage. While not guaranteed, dividends can enhance the value of your policy and provide extra flexibility. It's important to check whether your policy is eligible for dividends and how they can be used. When you pay your whole life premium, part goes toward the death benefit, and part builds cash value. This allocation is what makes whole life unique. Over time, the cash value portion grows, providing a savings element within your policy. Understanding how premiums are allocated helps you see the dual benefits of protection and savings. The cash value in your policy can be used for many purposes. You can borrow against it, withdraw funds, or even use it to pay premiums. Some people use cash value for emergencies, education, expenses, or retirement income. The flexibility makes whole life insurance a versatile financial tool, beyond just providing a death benefit. It's important to distinguish between cash value and death benefit. The cash value is available while you're alive and can be accessed for various needs. The death benefit is paid to your beneficiaries when you pass away. Using cash value may reduce the death benefit, so understanding the relationship between the two is key to managing your policy effectively. If you decide to surrender your whole life policy, you can receive the accumulated cash value minus any fees or outstanding loans. Surrendering ends your coverage and may have tax implications. It's a major decision, so understanding the consequences is important before taking action. Whole life insurance can be customized with riders. Riders are additional features or benefits, such as accelerated death benefit, waiver of premium, or child term coverage. These options allow you to tailor your policy to your needs, adding flexibility and protection. Whole life insurance differs from term insurance in several ways. Whole life provides permanent coverage, builds cash value, and offers fixed premiums. Term insurance is temporary, has no cash value, and usually costs less. Understanding these differences helps you choose the right policy for your needs. Whole life insurance is ideal for those seeking lifelong coverage, guaranteed benefits, and a savings component. It's often chosen by people with long-term financial goals, estate planning needs, or those wanting to leave a legacy. If you value stability and predictability, whole life may be a good fit. Whole life insurance is more expensive than term insurance because of its permanent coverage and cash value. Premiums are higher, but the benefits can outweigh the costs for those with long-term needs. It's important to compare costs and benefits before choosing a policy. Let's look at a hypothetical example. Suppose you buy a whole life policy at age 30. Over the years, your cash value grows steadily, and by age 50, you have a substantial amount available. This growth is guaranteed and can be used for loans, withdrawals, or even to pay premiums. The example shows how whole life can build wealth over time. Some people use their policy's cash value to supplement retirement income. By taking loans or withdrawals, you can access funds tax efficiently. This strategy can provide extra security in retirement, especially if you've built up significant cash value over the years. The cash value in your whole life policy can be a safety net for emergencies. Whether it's unexpected medical expenses, job loss, or urgent repairs, you can access funds quickly through loans or withdrawals. This flexibility adds peace of mind, knowing you have resources available when needed. Some families use whole life cash value to fund education expenses. By borrowing against the policy, you can pay for college or other educational needs without disrupting your savings. The flexibility and tax advantages make it a useful option for planning ahead. Cash value can be used to seize opportunities, such as starting a business or investing. By borrowing against your policy, you can access funds quickly and without credit checks. This can help you take advantage of opportunities as they arise, using your policy as a financial resource. Whole life insurance can help you leave a legacy. The death benefit provides financial support to your heirs, while the cash value can be used for gifts or charitable donations during your lifetime. This dual benefit makes whole life a powerful tool for legacy planning. If you've built up enough cash value, you can use it to pay your policy premiums. This can help during times when income is tight, ensuring your coverage stays active. Using cash value for premiums adds flexibility and can keep your policy in force without out-of-pocket payments. Whole life insurance is often used in estate planning. The death benefit can help cover estate taxes, ensuring your heirs receive more of your assets. The cash value can also be used for gifts or other planning strategies. This makes whole life a valuable tool for managing your estate. Some people use whole life cash value for charitable giving. By withdrawing or borrowing against the policy, you can make donations during your lifetime. The death benefit can also be directed to charities, supporting causes you care about. This adds a philanthropic dimension to your policy. Business owners can use whole life cash value for business needs. It can provide funds for expansion, emergencies, or succession planning. The flexibility and stability make whole life insurance a valuable asset for entrepreneurs and business owners. Whole life insurance can help families plan for special needs. The death benefit provides long-term support, while cash value can be used for care expenses. This ensures loved ones with special needs are protected and financially secure. If you have debts, you can use your policy's cash value to repay them. This can help reduce financial stress and improve your overall financial health. Using cash value for debt repayment is a practical way to leverage your policy's savings component. Medical expenses can be unpredictable. Whole life cash value offers a way to cover these costs without tapping into other savings. Loans or withdrawals can provide quick access to funds, helping you manage unexpected medical bills. Some people use whole life cash value to help with home purchases. By borrowing against the policy, you can fund a down payment or cover other costs. This can make homeownership more accessible and provide financial flexibility. If you love to travel, whole life cash value can help fund your adventures. Loans or withdrawals can provide extra money for vacations, making your policy a resource for enjoying life. The flexibility allows you to use your savings for memorable experiences. Some policyholders use cash value to invest in other opportunities. By borrowing against the policy, you can fund investments without liquidating other assets. This strategy can help diversify your portfolio and build wealth. Whole life cash value can be used to support family members. Whether it's helping with expenses, education, or emergencies, your policy provides a flexible resource. This adds another layer of protection for your loved ones. Your policy's cash value can be used to enhance your lifestyle. Whether it's funding, hobbies, travel, or personal goals, the flexibility allows you to enjoy life while maintaining financial security. Whole life insurance is more than just protection. It's a tool for living well. Whole life cash value can play a key role in your financial plan. It offers stability, flexibility, and guaranteed growth. By integrating your policy with other financial strategies, you can build a comprehensive plan for your future. Whole life insurance can help with tax planning. The tax-deferred growth and tax-free loans allow you to manage your tax liability efficiently. This makes whole life a valuable asset for those looking to optimize their tax strategy. Whole life cash value is ideal for long-term goals. Whether it's retirement, education, or legacy planning, the guaranteed growth and flexibility make it a reliable resource. By planning ahead, you can use your policy to achieve important milestones. The flexibility of whole life cash value is one of its greatest strengths. You can use it for a variety of purposes, adapt to changing needs, and access funds when necessary. This adaptability makes whole life insurance a versatile part of your financial toolkit. Whole life cash value provides financial security. It's a stable asset that grows over time and can be accessed when needed. This security is valuable for individuals and families looking to protect their financial future. Knowing you have access to cash value gives peace of mind. Whether it's for emergencies, opportunities, or planned expenses, your policy is a reliable source of funds. This assurance helps you face life's challenges with confidence. To sum up, whole life insurance offers permanent coverage, fixed premiums, and a unique cash value feature. The cash value grows over time, can be accessed for various needs, and provides flexibility and security. Whether you're planning for retirement, emergencies, or legacy, whole life insurance can be a powerful financial tool. Understanding how it works helps you make informed decisions and maximize its benefits for your future.